Welcome, ladies and gentlemen, Commodity TV from our studio here in Switzerland. And with me here is a very well-known interview partner. I would call him Professor Dr. Torsten Dennin, who is the head fund manager and head asset manager from Asset Management Switzerland, and also from Linkeos Capital. And also he wrote several books already. And I have his latest one here, From Tulips to Bitcoin, which is available now in English, of course, also. And we want to talk about the book and we want to talk about the markets. Torsten, welcome.
Thank you, Jochen.
Yeah, thanks for your fabulous book, and I had the honor to write the preface, the entrance word, and I think it's a fantastic compendium. Maybe you want to give us a short idea what's the book about?
Thank you, Jochen, very much also for the pre-word for the book. It's always good to have somebody who has this deep passion for commodities, who is having some introduction words for a more commodity-focused book.
Yeah,
I mean, in a nutshell, the book is on big speculative bubbles, booms and busts in commodities and crypto markets, because recently both markets have a lot of in common when you compare, for example, gold, silver, and the crypto market. The bubble in Bitcoin. I mean, for me as an economist, it was very interesting to see 400 years of history, the tulip mania. It's the biggest bubble in global financial markets for all this time being. Tech bubble, NASDAQ, anything in the stock market. We've seen for 400 years, every economic and finance student talked about tulips. And now we can talk about something new. We can talk about Bitcoin, because Bitcoin rose from a couple of cents to $20,000. And this is basically the framework of a book, also containing like gold, silver, copper in China, copper in Japan, like the shift from Japan to China in the markets, what you see also in the world economy.
Interesting, great. Of course, it's also, let's say, a little bit about gold, silver, and stuff like this, because there also a lot happened, like with the Hunt brothers in the silver mania in the 60s, And maybe you want to comment a little bit, as it's very actual gold. It looks like it's broken out again. Hopefully, it makes now its way upwards. What's your thesis on that, gold and silver?
Yeah, several of the chapters in my book concerning precious metals, when you compare, for example, the big scandal from BX in the recent years, or more, for example, the monetization, the demonetization of gold. And now, I mean, the last years haven't been very spectacular for the precious metals investors.
It was a nightmare.
Yes, politely speaking. The last 4 to 5 years have been very, very dim. Gold was trading in a trading range, always trying to break out, because the fundamentals of the market look very good. But people were either interested more on the Bitcoin theme, because this was new, or they're interested in the global equity story, because they're putting the fundamental data in the background and seeing the prices rise because of central bank action. And now we have the crossroad is very interesting for the precious metal, because the fundamental picture has been interesting, is still interesting. It's even more interesting what the negative yields are implying in terms of inflation, in terms of global debt. And we have the combination of a solid technical picture now, as the gold price shot through this 1370, 1380 US dollar mark, as you pointed out in several interviews before. And now I see like a clear sky, a blue sky scenario for the precious metal prices and the gold prices to move significantly higher.
Okay. As we are both macroeconomists, negative yields. This is something which never ever happened during my time at university. What are you telling your students? Because I think the models are not working, right?
it's impacting the core of financial markets and the core of financial studies. When you try to start with a finance 101 about present value and future value, the same fundamentals are not working anymore. And as long if this situation holds much longer, for like a couple of years, this will feed through the whole economy. For a couple of months, for 2 or 3 years, it's not a big deal of a problem. But with low negative yield environment on a global scale for 4/5 or like all the global bonds, I mean, what kind of investors are giving away money and receiving a negative yield in between?
They have to pay for it.
They have to pay for lending out money. This can only be institutional investors, because every private investors would be stupid to do so.
Exactly.
Right?
Yeah, absolutely. If we look now at this whole scenario, what we have talking about the last minutes, how do you see then, let's say, mining stocks, gold-silver ratio, valuations? Now we talked about gold is moving, silver looks quite good, I would say. Yeah, also the fundamentals, supply demand look quite good. How do you see the whole picture here?
Yeah, the whole picture, when you look at capital markets in the moment, it's a low interest rate environment. It's an interest rate environment that's switching from a rate increasing cycle to a rate decreasing cycle again. When we're looking at the US, feeding into Europe, for example, in the September-October period. Valuation on the equity markets has corrected a bit, but it's still stretched. So look at the S&P 500, for example, and it's still ignoring growth pictures. The growth is coming down, global growth is coming down, but also growth in key economics like China, like US, in Europe, look at the UK or Germany. It's PMIs in Germany are catastrophe. And this global pictures is bad for equity markets. It's more than stretched for bond markets. So people look for insurance, and the insurance for global capital markets is the precious metal trade. So therefore, fundamentals are looking very interesting. And this is also the explanation why, besides the precious metals, at the same time, for example, Bitcoin is rising again from $3,200 to $10,000 and more. Because actually it's the same trade in insurance. It's just about who's taking the insurance.
That's right.
Like the big investors with solid hands, the hard investors, or like the smaller and speculative investors.
Interesting. Maybe one last word on the mining sector.
On the mining sector, when you compare the mining stocks in the moment to the equity markets, they have been cheap, they're still cheap. Interesting, I think, is the gold mining space in this environment, because the spread, gold rose already from 1300, 1340, 14, 15. We're currently just slightly about 1500s. And you see the valuation of the big gold miners. The big gold miners, the blue chip gold miners, just increased a bit. But compared to the last 20 to 30 years, in regard to the gold price, they can still go 100, 150% easily. So therefore, the gold mining space, also a little bit on the silver mining space, would be the only thing I would consider in the moment on the equity markets for having like a solid weight or like an overweight.
Perfect. Well, Torsten, thank you very much. Thanks for your book, and thanks for the interview, of course. And let's see what happens. I think the perfect storm is arising, but positively for gold and silver.
Pleasure to talk about that. Thank you very much.
Thank you very much, Torsten. Yeah, ladies and gentlemen, that was Professor Dr. Torsten Dennin, and you heard him. That's his new book, From Tulips to Bitcoin, and I really suggest you should read it. I started already to read it, of course, and it's really fantastically written. And yeah, we have the perfect storm. We have negative interest rates, which is a positive storm for gold and silver, meaning for the precious metals. And still we have big undervaluation in the mining sector, especially in the good producers and the large producers. And yeah, there's a lot is going on here. A lot is not going in the real solid, correct way. And yeah, we will see what happens in the next years. But it's always good to have some insurance in the cellar, aside a good wine, of course. And that's precious metals. So thanks for watching us, and bye-bye from Switzerland.